Hemindra Hazari is with us here in our studios. Hemindra, good morning. Great to have you with us here. Hemindra, of course, has a slightly different take on markets and everything in life generally compared to the regular market view, the conventional view. Hemindra, it's good to see you. The election results, about a week, more than a week back now, the bi-poll results came as a setback for the BJP, especially in Uttar Pradesh. The market barely noticed. I mean, if it did notice, it didn't show it. It didn't show the bother. How did you sort of see the results? And we had Dorab Sapariwala, who's been analyzing election results for a long while. His take was it's very, very unusual that after such a massive victory in a Lok Sabha election, within almost 100 days plus, you get this kind of a result.
See, firstly, I think one has to understand that the Indian markets really has ceased to react to domestic events. Even if you see the macroeconomic data, some of which is quite distressing, the markets seem to continue to go up. So it is global events which are mainly influencing the Indian stock market. Now, coming to your question on the election results, yes, the "Achhe din aane wale hai" slogan, has got beaten down, it appears, by the electorate. And it is possible that, it's the food inflation which has caused this in the last 2 to 3 months, especially, the items like onions and potatoes, which are items of mass consumption. So there, if you see the inflation, it has been going up, in that particular category. So it is, it could be an explanation that people had very high expectations from this government. And unfortunately, what they were confronted with their day-to-day lives was the food inflation, especially in some, very critical staple foods had gone up. So it is possible that, as an economic factor, that contributed. And also perhaps, the kind of polarization that was taking place in Uttar Pradesh, that also did have an impact.
Anand, by the way, if you remember when Dorab was on, he was saying that we'd have to, in UP, for example, we'd have to look at the vote share data. Yeah. Right? I mean, where did the votes for the BSP and other votes really go?
Because I thought I'd look at it, but I did not. So perhaps we'll just try and bring it up, while, Prashant.
Yeah. Hemindra, the market reaction seems to be the fact that, well, why are you talking about this? This is just over-exaggeration. There's a huge look. And by the way, you said
come in on that a little bit, Prashant. I just want to come in on that a little bit. I think that it's not correct for us to say that the markets did not react, because when the numbers came out, the assembly election numbers came out, we saw a correction in the stock markets that day. In fact, there was a massive sell-off in the small cap and mid cap space that day.
Okay, I think we need to up the audio.
All right. Okay, let me say that again.
You have to repeat that on it.
Okay, let me repeat that again. The day the numbers came out, the results came out, midway through, when it was clear that the BJP is facing a major setback in UP, Rajasthan, even in Gujarat, that the Congress actually ended up winning 3 seats, the markets corrected quite sharply. That day, Europe opened in the green, quite significantly in the green, but we continued to correct in the second half, and there was a massive sell-off in the small cap and mid cap space. The next morning, the sell-off continued for a while, Prashant. Yeah. Till we saw the markets go up on very low volumes, driven almost entirely by 3 or 4 counters. ICICI Bank, ITC, RIL. The RIL, ITC counters which have not gone up at all in the past, they pushed up because of the heavy weight. So one has to look at who brought it to push the markets up beyond a certain technical level and push it up again. The first day, it did correct.
You're not saying what comes after what you said so far. But I think, who bought, right? That's the question.
Yeah, who bought?
Who did the buying?
Because we saw, I think the FIIs that day were net sellers and domestic institutions were net buyers of 9 crores. But we ended up the next day in positive.
But the point is, it's not had a, if you look at, say, price levels one day prior to the election results and take a look at price levels now, right? Yeah. Don't look at the Nifty, look at stocks. I think we're broadly higher. So the fact is the market over a period of time hasn't reacted. Maybe, it did get worried a little bit. But Hemindra, the general sense from the market has been, well, don't pay too much attention to it. And the market, of course, the big re-rating event was the government formation itself. So that is in place and everything else is secondary. So you got this 5-year term for Mr. Modi and his team. So just focus on that. Why are you sort of getting bothered with these little things? And now, of course, you've got the Maharashtra elections and this Shiv Sena BJP split also coming up. So how do you look at this? Do you think it will be material as we go along slowly? It would start to matter, contrary to what market people would like you to believe.
See, as I said, it has to be seen firstly whether these alliances remain the way they are or they all disintegrate. Of course, if both these alliances disintegrate, then it's, kind of an open season. And one will never know who is going to form the government, and probably post-election, what alliances will be formed. But the overall, as I said, the overall view on the market is really being influenced by foreign developments. And while you may have 1 or 2 days of some reaction to domestic data, I think it is the global, the signals from the globe, particularly from the developed economies like United States, which is going to determine the broad direction of our market here.
But Mr. Hazari, even on days when there is weakness in the American markets or even in the European markets, Indian markets continue to go up. If you look at the commentary, not just you, almost everyone we see, at least 8 out of 10 people who come say the markets are a little overheated, or we are sitting on a bit of cash, things need to correct a little bit. But they just don't correct. No one seems to know why the markets are going up.
Yeah, that is very true. Because if you see the broad underlying economic data, it continues to depress. The only thing that appears promising, at least for the short while, is that inflation has been coming down, which could itself be a signal of, lessening demand. And the external front, that is with the greater FI inflows, you've seen the rupee strengthen. And, even the trade deficit has narrowed mainly because of import compression. So these are the positive signals. But if you see the broader underlying economy, the things are the same, or they've even deteriorated further. So it always defies an explanation of why this market is constantly going up.
I was just asking a question to a guest who had come earlier on the show, that in 2004-05, many of us, white-collar workers, especially people in the service sector, the management, broad management kind of people, in a broad sense, we saw significant raises in our salaries. We saw, there was a wealth effect, and then the stock market started to rise up. This time the reverse seems to have happened. No one's getting raises when the markets are going up. People are being sacked. There's contraction taking place all over the place. When markets are going up, there's no retail interest whatsoever.
Sorry to interrupt, but I think that's only true for media. I think, look at consumer-facing industries. They've been doing just fine. Pharmaceutical, consumers,
every day,
auto.
Prashant, I read of people being sacked not only in India but in the US, which supposedly is getting.
The US, true.
Even in India, there are no one saying I'm going to increase my numbers. Everyone's saying we are going to be, our margins will improve next time because we are going to lower our wage costs. So, that clearly gives you a signal that this is not going to be something which is going to give rise to effective demand. Mr. Hazari, this time around, you don't see your neighbor and his driver giving you stock advice. No one seems to be that interested. Everyone's still pretty worried.
No, obviously, because the state of the economy is still very dire. Globally as well as in India, there is a serious dysfunction between the state of the market and the state of the economy. Even in the US economy, you find that despite the stock prices going up, real wages there are refused to go up. And even if you see the labor participation ratio, that has been on a secular decline. So you're not seeing real employment picking up, you're not seeing real wages picking up, and the only thing which is going up is the stock market. So there is two things they're going in diametrically opposite directions, the economy and the market.
Okay, so in a sense, Mr. Hazari, a lot of changes are actually taking place which the markets don't necessarily like and they're kind of ignoring. And I'm talking about India, for instance. If you look at it, the government has turned out to be very different from what the markets expected. I'm sure you've seen today's Economic Times in the morning. The markets kind of were very happy that the Modi-led NDA government is going to come in place because all these so-called profligate kind of policies of the UPA, giving free food, food subsidy, that's going to be cut. Now we are hearing that's going to increase.
See, by and large, this market is a very this government is a very pro-industry, pro-market government. So whatever few things that they still managed to get probably because of electoral politics. You just see the way, the Environment Ministry has been clearing all these projects. I mean, that probably is the most active ministry today. A lot of the environmental clearances, which, in my view, there were some valid reasons to hold them back. The minister has been clearing them left, right and center. So this has been very clear. This has been one of the demands of corporate India that these are hurdles, for us. And therefore, this minister has been clearing it. So a lot of the
that kind of started when Ms. Natarajan was removed, right? It's not as if the NDA government came and started that.
No, exactly. So my view has always been there's nothing materially different from this government as compared to the earlier government. The turban has gone, the bearded man still remains. The policies are really no different. But the market had expectation that they would be a lot different. And my point has always been no government can do anything as long as there is a cap on government expenditure and the Reserve Bank of India refuses to reduce interest rates. There's not much you can do to revive the economy in such a situation.
But interestingly, Mr. Hazari, what was expected, my reading, at least in Delhi, seems to be that this is a very different government from what you saw in the later part of the UPA. This is a much more state-centric government. We've got more information, like recently we heard that the government is going to increase expenditure. That it feels that it has enough the oil import bill has come down. So it might actually increase disbursals to ministries and ask them to spend their entire amount and if required, spend more. This is exactly opposite of what Mr. Chidambaram did in the last 2 years of the UPA, where he actually did not disperse money.
Now, I would welcome such a move by this government if it were to do so. But at the same time, they are saying they're going to maintain the fiscal deficit. So, that type of, they're going to compensate the, the reduction in, say, the diesel subsidy with this type of expenditure. To me, yes, it's a positive, but it's a very mild positive because you need to increase government expenditure significantly as a percentage of GDP if you really want to see improvement on the ground. A marginal increase in government expenditure will not give you the desired positive result.
Right.
So is that the government going to do? I don't think so. So you may have at the best some minor increase in government expenditure, but that is not going to revive the situation as it is today.
Okay, let's just talk about what's been happening globally, right? Since you said that the market is only bothered about what's happening what are the global factors. One thing which has been happening is commodity prices have been correcting significantly. Let's actually put the data up, which we've been sort of highlighting. So all large commodities, large import commodities have corrected between, say, 5 and about 25%. Oil down 12, coal down 22, iron ore down about 40%, rubber is down 25, palm oil, wheat, steel, copper, there are more. But you get the idea. Hemindra, how would you read this? I mean, this is also, would you say this is a big tailwind for the government to be able to actually, increase expenditure? I mean, it's got some wriggle room now, and that's why you're seeing these kind of things.
See, one reason for the decline in global commodity prices is that the dollar has strengthened. And that has happened because there's a view now that the interest rates have bottomed out in the US and that they would go up and therefore capital may be rushing into the US economy. Now, coming to the Indian context, that if this results in lower prices and therefore lower inflation, yes, it may result in lower prices, it may bring down inflation, but that does not necessarily mean that you're going to get growth. Because in the period 1998 to 2003, one saw a similar type of situation where, inflation was very low, interest rates also had come down, but there was really no recovery, and the recovery only takes place because of capital inflows coming in. Now, here also, it all depends whether Governor Rajan of the RBI actually starts reducing interest rates, because if he continues to keep interest rates high, the situation cannot improve.
But there's also, capital flows also are a function of yield, right? So if he reduces rates and rates in the US goes up, say, as some are saying in the first half of 2015, what happens then?
If
Dr. Rajan reduces rates here, if he starts the process of reducing rates here and the rates in US actually go up, what happens to capital flows then?
Yeah, so that is always the most critical factor in today's markets is capital flows. So if anything which results in a reversal of capital flows is obviously a major negative.
Yeah.
But the fact is that if he at least reduces interest rates, at least you will ease the pain. It may not revive your capital expenditure cycle, which I don't think it can, but at least it will ease the situation. And if you see the way the consumer durables are, the latest IIP numbers show that there's been a decline of nearly 21%. So it helps, it can helpfully at least revive some demand, at least in the consumer durable sector. But without that, you're going to be a very difficult situation.
Dr. Rajan has been making the opposite point. So actually, keeping rates high would result in a positive real rate, right, for savers. And that is important. You need to get savings, the proportion of savings up. And over a period of time, that is the only way, that is the only that's the significant chunk of capital that you will have for investments, for infrastructure investment spending, etc. But you are arguing for the opposite. I mean, you want the same end result, but you are arguing it from the other side.
Yeah, because see, I disagree with Dr. Rajan in this, because that school of thought starts with the assumption that everything flows from savings. And therefore, if you need investments, you require increased savings. According to me, and a lot of other Keynesian economists as well, you can, it starts with investments. You don't need savings to increase investments. The government can do deficit financing and increase investments, and as a result of which savings can increase. But this school of thought, which Dr. Rajan and a lot of economists associate with the capital market, their whole thesis starts with savings, that you have to increase savings to have investments. And I disagree with that view.
No, but do you think he really has any choice? I mean, we have discussed this many times on the show, and you've said markets won't let governments spend. So deficit financing is out of the question. So in that sense, in that context, what is the other option?
No, there are very limited options, and therefore I have always maintained that you cannot have a sustainable growth, that you have to expect a very low growth going forward. Because with these type of constraints, it's very difficult for any economy, to come out of it. If you do not increase government expenditure, and if you cap, you keep interest rates high, then I do not see how growth can pick up. So then one has to accept that you're going to be in a period of low growth, and it will be very similar to the situation in the Indian economy that was there between 1998 and 2003, where you had these little blips where everyone used to get excited that, oh yeah, this is the turnaround, and everyone gets, excited when one sees some inflation data, improving, but actually you're not going to see significant improvement.
Yeah. Okay, since you said that it's all about global, I'm sticking to global here, and I just want to put up four quotes from, some would say the people who are actually responsible for creating all this easy money liquidity around the world. So this is, warning number one. Janet Yellen, a few months back, said valuation matrices in some sectors do appear substantially stretched, particularly those for smaller firms and social media and biotech industries. Warning two from the Bank of International Settlements, the banker to banks. It's hard to avoid the sense of a puzzling disconnect between markets' buoyancy and underlying economic developments globally. Warning number three, IMF. Financial market indicators suggested investor bets funded with borrowed money look excessive, and that markets could quickly deflate if there were surprises. And the latest from the group of 20 nations 2 days back, low interest rates are contributing to a potential increase in financial market risk as major policymakers rely on monetary stimulus to bolster growth. Hemindra, how would you look at these warnings? I mean, are we really getting to a break point, and some of these regulatory bodies, etc., they want to sort of wash their hands off it, as somebody yesterday pointed out? That is what is going on here? So, hey, we told you so.
See, let us see how the global central banks are addressing it. Are they increasing interest rates immediately? No. They're all accepting that, yes, valuations are stretched, there are bubbles, but they're refusing to increase interest rates because I think they all know that you require bubble, at least to give you some positive sign, because there's nothing else you can do. And that is the sad commentary of the states today, that, as Anindya had once earlier mentioned, you need these bubbles because there's nothing else which appears positive otherwise. So central banks, they come down very harshly on inflation, but they seem to tolerate asset, price inflation for a considerable long time, till it bursts.
Actually, Mr. Hazari, before we let you go, I just want to point out some two headlines One was about 15 hours ago, and I'm just going to read them out. One was that copper prices fall to 3-month low ahead of weak China PMI numbers. Fearing weak China PMI numbers, copper prices fall to a 3-month low. And about 40 minutes ago, we have copper prices rise on HSBC China PMI figure.
Sorry, what was the last one?
Because the PMI number was expected to be about 50, it's been 50.2. So because it was expected to be less than 50, yesterday it went to a 3-month low. Today it's gone up sharply because it's turned out to be slightly higher. This is entirely sentiment-driven operation of finance. So where is the real economy in any case?
I would say it's also some very bad headline writing. I mean, it's terrible.
No, I'm just saying it's true. That you come out with HSBC PMI numbers which beat what markets expect and the copper prices rise. And you expect lower numbers and the copper prices go down. So where is this? We are operating in a space where daily commentary is based on sentiment, right? I mean, the real economy takes time to move. Would you agree with that?
Now the markets have been de-linked from the real economy, both globally as well as in India. And I have been, saying that for some time now. So
Right.
all of us fundamental analysts try to, look at the fundamentals and predict, but unfortunately that's not what happens.
Yeah.
So all of us now tend to look at the flows and the future direction of the flows, and then we make our fundamental commentary.
I think one of the lessons to learn for people like us who are doing commentary on a daily basis is that don't go with the flow. There will be a time when the flow will turn against you and turn against the markets, but everyone's going to lose out on the, the great rise in prices if you don't go with the flow. Thank you so much for joining us.